Hey everybody, it's Will here. Welcome back to another episode of Blockware Intelligence YouTube channel. As always, we're going to be going over an overview of this week from an on-chain perspective and give you guys some information that you may find useful. So first of all, it's been another volatile week for Bitcoin, fueled by some macro uncertainty and risk-off behavior in traditional markets. Also in the last 24 hours, we've got both positive news in Twitter integrating Lightning, which is awesome, and then also some negative news in China supposedly banning Bitcoin for the millionth time. So let's dive into some information from an on-chain perspective that hopefully you can find useful. I'm going to first start it off with some shorter term indicators, and then towards the latter half of the letter, I'm going to try to kind of paint the macro picture for you guys. I kind of really want to drill home the idea that on-chain analysis is best used to kind of identify these broader trends. So some key takeaways for this week. First of all, the market absorbed 2 consecutive days of over $650 million in net realized losses, and this was on Monday and Tuesday. And this was following some risk-off behavior from macro uncertainty in traditional markets. Exchange balances have increased by roughly $190 million this week, most of which was inflows to Binance on Monday and Tuesday. After absorbing these losses, the market is now slightly back in a state of profit. Currently, we're between 2 large zones of on-chain volume, so 2 clusters of on-chain volume. Price came very close to the floor model that I've built around Bitcoin's real-time scarcity. Whales and minnows are both accumulating. Long-term investors with little spending behavior also continue to lock up BTC. 93% of supply hasn't moved in at least a month, which is an all-time high. Hash continues to come back on the network. Miners are slightly back in accumulation after some selling that we've been tracking over the last month. And these are the key takeaways for Bitcoin-related equities done by Blake Davis. I'm not going to read his section because I don't want to misspeak, but here are the key takeaways that he put in there for you guys. So he says, there are some clues that the general market has found support, but the risk of a continued correction is not off the table. General market corrections are great opportunities to hunt down the stocks that will lead the market in the next move upwards. We break down a strategy to compare crypto-exposed equities to both the general market and Bitcoin to find the strongest names in the industry group. So let's go ahead and dive into our on-chain metrics. So first we have our URPD chart. This is essentially on-chain volume, showing where large amounts of BTC have been transacted. So this can be used to help us gauge where investors' cost basis lies and where zones of demand lie. So currently, after just dropping on the China FUD this morning, Bitcoin sits between 2 large clusters of volume. As you can see below, I highlighted it with these black arrows here, and then the clusters are highlighted in this blue shaded area. So we'll be watching how price reacts at either the upper bound of the cluster below us, which served as support last week, or at the lower end of the cluster above us as some short-term resistance. During the sell-off earlier this week, the market absorbed roughly $650 million of net realized losses back-to-back on Monday and Tuesday. These were the first consecutive days, so first back-to-back consecutive days of net realized losses since early July. Since the market has rebounded into a state of net profit being realized, but you want to see this sustained, and also you want to see this reflected in our SOFR metrics, which is another way to gauge the profit-taking state of the market, which we'll take a look at. Looking at futures open interest, we can see the difference between the liquidation cascade from 2 or 3 weeks ago compared to the events from earlier this week. The prior event was primarily driven by high open interest, high funding, meaning there was a lot of leverage in the market. Spot sold down enough to trigger stop losses for traders, and boom, initiated a cascade of liquidations that sharply drew down open interest. This recent sell-off, however, seems to be much more controlled, or seems to have been much more controlled, resembling risk-off behavior from traders and active managers driven by macro uncertainty with everything going on in China. And so you'll see that here. You see this sharp decline, almost like dropping off a cliff, versus now we have this rounded pattern of controlled selling. Funding has now been negative for several consecutive days. This either means spot is leading futures, so spot is out buying futures, or there's strong demand to be positioned short on perpetual futures. And so you'll see here, as a general premise, when you have prolonged negative funding, it's a bullish sign. When you have prolonged positive funding, that's a bearish sign. And so as you can see, as we consolidated, during the summer, we had prolonged negative funding. Over the last, call it 2 months, we've had, prolonged slightly positive funding. especially before that, that sell-off we had 2 or 3 weeks ago when we drew down like 20% in a day. And so, over the last almost week or so, we've had almost, straight negative funding. So something to keep an eye on for sure. Similar to our net realized profit loss metric, SOFR has dipped below 1, but since has reclaimed a state of profit. So this is very similar to, as we looked at earlier, talking about the market had realized 2 back-to-back days of $650 million in net realized losses. SOFR is a simple ratio comparing all the coins trading on this day, or each given day, I should say, and looking at the profit that the market is trading. So to break below 1 plus a failed test of 1 as resistance would be bearish. What we want to see for bullish continuation is to hold a state of profit, retest 1 as support, and then continue stabilizing above 1. In a bear market, you want to be risk averse at tests of 1, and in a bull market, you want to look to average in buys around retests of 1. Next is a metric that I created this week, actually, with help from my good friend Matt. I call this the illiquid supply floor. So using Glassnode's liquid supply data, which is looking at entities with very low spending behavior, this model is essentially trying to estimate a floor based on Bitcoin's real-time scarcity. Although price has indeed dipped briefly below the model in mid-2017 and also earlier this year during the summer, it has never stayed below for long and still remains a valid proxy for kind of an estimated floor, in my opinion. Model currently sits around $38,300, $38,283 to be exact. So we'll see if the model holds over the next couple months. As I mentioned a second ago, we have briefly dipped below it. I don't know if you can see my cursor, but here mid 2017, very very briefly at the bottom of the 2018 bear, and then also here, in late June, July. Also interestingly, we bounced off this when we had that September correction leading into the bull market last year. So we'll see. Yeah, we'll see over the next couple weeks, next couple months if the model stays true. But I have pretty strong confidence in this. Essentially, what this is it's using Plan B's concept behind stock to flow, but instead of using circulating supply, I'm using that illiquid supply data. So for anybody who wants to recreate it themselves, I'll try to get this up public, but the thing is, it's using Glassnode's liquid supply data, which is $800 a month. So I can't publish it live, but for anybody who does have a Glassnode subscription, you can create this yourself using Plan B's formula for stock to flow. And also I'll post it periodically on Twitter as well and in the newsletter. Next up, we have our supply shock related metrics. Long-term investors continue to lock up BTC. We're actually getting a really strong divergence from price here. We saw a similar divergence back in June, July, and this is when we called that reversal from the low 30Ks. At the same time, I remember that was when people were calling on-chain snake oil as well. So from a sentiment perspective, similar in that sense too. What you're essentially having here is long-term investors continue locking up coins, and at the same time, price is kind of going sideways bearish. In the case of earlier this year, now it seems like the divergence is the slope of it is much sharper, right? As you'll see, we've almost got this big impulse here in the metric as price has gone down. So I'm looking, for this to resolve over the next month or so. Exchanges had net inflows this week, especially on Monday and Tuesday to Binance, as we mentioned. In total, exchange balances are up 4,586 BTC at the time of writing, which is roughly $190 million at $41,000 Bitcoin price. So that's shown by this purple line here. This is our exchange supply shock ratio. So this is just comparing the amount of coins available on exchanges, the amount of coins that aren't available to be bought off exchanges. And so, yeah, we've gotten a little dip earlier this week, but the broader trend is up. But definitely we'll continue to keep an eye on it for you guys, obviously. Whales are buying and have been since mid-July. And when zooming out, we can see that following trends of whales has been a pretty viable idea for being in this market. These big players tend to buy early on in these broader uptrends and then sell into strength. So as you'll see here, between 2013 double pumps, heading into the bear between 2014 and 2017, whales started buying heavily and then started distributing into strength. Right, see similar thing here too. Also at the bottom of the 2018 bear, that's when you started to see whales begin to accumulate heavily again. And now is the early part of that mini 2019 bull run. They then sold into strength at the peak of that little 2019 bull run. Whales then began buying heavily after, right around COVID, which is interesting because you also see similar upticks in a liquid supply at that time. And then they started distributing into the top of the bull market, right here, the early part of the bull market, I should say. And then since then they've started buying again down here. So if history shows, following whales, which are the big buyers in the market, essentially the money that's moving the market, at least in the short term, has been a pretty good idea. Minnows, these are the little guys, so entities with less than 10 BTC have also been buying in addition to whales. And when we zoom out, the portion of supply held by retail, we see that their holdings are currently in a large macro increase, similar to what we see in the middle of each major price increase throughout Bitcoin's history. You see here, 2017, and then now here. And so, as Willie likes to put it, retail really drives the middle part of the bull market. And so seeing this macro increase is interesting to when you align it, especially with what's going on with long-term holders and also whales. So all across the board, we're starting to resemble what kind of behavior takes place in this at the beginning of kind of a macro move upwards. Next up, we have our entities with low spending behavior. This is our liquid supply shock ratio, and what you have here is over the last 4 or 5 years, I kind of plotted this out and showed you. When you have the metric moving down, that means a bunch of coins are becoming liquid. You have the metric moving up, you have coins moving to these liquid entities, so entities with low spending behavior. And so heading into the middle of 2017, you had coins getting locked up, and then moving down into the 2018 bear from the 2017 peak, you had a bunch of coins becoming liquid. We kind of trended sideways and until COVID. And this is interesting, as we mentioned, you saw whales begin to buy heavily here as well. And then also here, as you can see, liquid supply starts moving up. We get into kind of late April, early May, you start to see a bunch of coins becoming liquid that were previously illiquid. And so that was a good leading indicator that we were going to see some bearish price action. Also saw 145,000 coins move on exchanges in a matter of like 3 or 4 weeks at the time. And then as we started bleeding sideways bearish in terms of price action, the metric started, as we talked about earlier, started showing a bullish divergence. So long-term investors began locking up those coins against price, and we got 2 impulses, and since are now in the midst of a third impulse here. So this is the divergence that we just looked at. This is just zooming out on the chart essentially. And then once again, plotting the liquid supply shock ratio out over time, we see a macro shift in investor behavior. So after March of last year, as you can see, we kind of broke out of this descending channel here. So we spent some time in the bottom half of it, here in the upper half of it since kind of 2017, and then since we've broken out above. So to me, what this is showing is that over time, Bitcoin was becoming more speculative. So more and more coins were moving to liquid entities that are moving coins in and out all day. But now, since COVID, perhaps because people are viewing Bitcoin as an inflation hedge or whatever it may be, you're now starting to see this shift in behavior from investors, where now they're locking up coins and just sitting tight on those coins. And then lastly, this is also reflected by our HODL waves, showing the portion of supply that hasn't moved in each denominated time cohort. And so what you'll see here is that we have an all-time high in supply that hasn't moved in at least a month at 93%. And then another way to look at this is just the fact that this is the amount of supply that is being actively traded is at an all-time low. So just once again, another way of showing how positive supply dynamics look for the coming months. And yeah, that's all I got for you guys this week. Blake did a really excellent job with the equity related side. He did a longer portion than he usually puts in there. So be sure to check out his thoughts. He went pretty in depth there. Just don't want to speak for him. And yeah, the podcast with David Quell, who's somebody I really look up to, will be out, I believe, Sunday. So be sure to look out for that. We also have the podcast now on Spotify, which is pretty sick. And then also we're working on getting it on Apple Podcasts for anybody who isn't on Spotify. So yeah, hope you guys enjoyed. Looking forward to speaking next week, and I hope you guys have a great weekend. Take care.